Welcome to this episode of Inside Forex brought to you by InvestSlow. And today with me, I'm having Mr. Wilson, the head of education for Africa, InvestSlow. He will be sharing with me his journey trading so far, and we'll be getting to know him, asking him a few questions and hearing his response. Mr. Wilson, it's really a pleasure having you here today.
Yeah, thanks for having me, good bro.
You are welcome. So today we would be wanting to get to know you, Mr. Wilson, your journey so far trading, and also a few questions as we are going along the way. So first off, we would like to know how you got into trading, your experience, the first time you got into trading, how trading was for you, and getting to this point. Just give us a little intro about your journey so far, getting into trading to this point, so the viewers, we get to know you properly.
Okay, I think I'll start by saying that first knew about trading, forex trading, while I was reading Why We Want You to Be Rich by Robert Kiyosaki and Donald Trump some years back. And I think in that book they listed about 4 ways where you can actually become very rich, and forex was one of them that was based not on investment but solely on knowledge.
Okay.
And as an average Nigerian, that becomes an option to actually dabble into. So over the years, I started looking for who was going to teach me. I was way back 2005, 2006, when the internet was still very poor. But over time, the internet became more elaborate, where you can actually learn things. So that's at 2016, I started studying about forex trading, and that's how I started learning.
Wow. That's a long time ago. I think 2005. I don't think I know anything concerning forex trading. I don't think I've heard the word forex before. That's actually a lot of years coming, and I'm sure within those years you would be filled with a lot of experience right now. I want to ask you one question before we move forward. Yeah, do you feel forex is a sustainable business or career to chase as a person?
Okay, that question, I want to say yes.
Okay.
If from my own perspective, all right, although truth be told, there is actually a lot of misconception about trading.
Yeah, actually, that's true.
So because of these misconceptions, people believe forex is now more like a scam. But I can tell you for free, forex is a real business. We're talking about the largest business in the world that trades over $7 trillion. So why would that kind of business be a scam? You understand? So we're talking about a business where all the governments of the world, the central banks of the world, the commercial banks, we have hedge fund managers, we have brokerage firms. And so whether you are an importer, an exporter in Nigeria, you're already indirectly participating in the forex market. When your siblings, your relatives send you money from the US, from the UK, or any other part of the world, you have to go to an aboki to convert the money. You're doing forex trading, whether you like it or not. So first of all, it's a real business. Secondly, it is very, very sustainable. But okay, for every business, there are always components that make the business successful. So firstly, we'll look at the knowledge base. Okay, secondly, we'll look at your money management, and lastly, your psychology about the whole business. So generally, we just say trading comprises of 3 main parts: the knowledge, so you have to make sure you acquire adequate knowledge. Then you talk about your money management. That is where a lot of people actually fail, but that contributes about 30% of your success. Because a lot of persons are very, very greedy. Forex is not a get rich quick scheme. It's not a business scheme. Neither is it a betting company. Then last but not least, your psychology generally, which is another broad topic that we can talk about later on.
Wow. Okay, I think you did a very, very good justice to that question. And you made mention of greed. Talking about greed, I feel in all aspects of life, greed is something that affects everybody in all aspects of life. But in the financial space, this is something that traders deal with. This is something that it's a real problem in the financial space. Talking about greed, it's a very, very serious problem, and that's what is setting a lot of people back, because a lot of people see the financial market as somewhere you could just go make a lot of money. Yeah, is that open for you to come in and make money and everything? But because of that, I feel that freedom of just coming in, and there's a lot of money for you to make. A lot of people get carried away by that. So for you now, with your experience over the years down to this point, what do you think it's a way to deal with greed? What do you think is the solution for greed for an aspiring trader out there or an already trading person out there? What do you think a person can do to overcome greed in the financial markets? As I feel it's very difficult.
First off, I was aside the psychological part. Okay, as a trader, there are a lot of tools that can actually enable you tone down the risk. So first of all, work on your risk management. Okay, and the first tool that everyone has been given to manage their risk is the leverage. So the lower your leverage, the lesser lot size you are likely to take. So what most people do, or I don't also blame brokers that give unlimited leverage. Very large leverage automatically enable you. If you understand what leverage is just
don't you think, just to coach you, don't you think, and 1 is to unlimited leverage, don't you think it's a bad thing, like a broker giving access to that?
Having unlimited leverage, any broker that is giving you unlimited leverage, sorry to say, wants you to lose your money, because you now have automatic unlimited risk. You understand? So even with just a $100 account and you have a leverage of 1:10,000, it means you have $100,000 in the market. So you can take 10 lot size, 20, 100 lot size, and if the market moves against you, automatically you're already gambling in a nutshell. Okay, that is the first tool that you use to mitigate risk. Take lower leverage. Personally, I don't do more than 1:200, 1:100. For you to know what I'm saying is true, if you go to countries like the US where Forex is highly regulated, the highest leverage you get is 1:25 or even 1:10. That is to tell you how much leverage greatly helps you to manage your risk. Then another tool is your stop loss. For every trading platform, be it the MetaTrader 4, the C Trader or Web Trader, there is a stop loss tool. This, when used and when calculated with relation to your pips and lot size, can help you mitigate your losses. So usually it's recommended don't risk more than 1% of your trade per trade, and you're not supposed to take more than 3 trades per day. So you treat trading as a business. You understand? You treat trading as a business. So personally, I don't take more than 0.5% of my account per trade, and I don't take more than 3 trades in a day. So it means I don't risk more than 1.5% of my account. So if my trade goes well and I'm taking 1:2, I might end up making 3% in a day. On the average, you might end up with grossly 10 to 20, 15% at the end of the month, which is good business if you have a good account size. So let's say you have a $10,000 account, you get it, and you're risking 1%. It means for each trade you're risking just $100. Now, if you're risking $100, it becomes easier to recover when you lose. But if you take too much risk and you're risking, let's say, $1,000, okay, that gives you a 10% risk per trade. On a very bad day, if you lose 10 trades, it means your $10,000 is gone. But if you're taking just 1% risk, it means you have to take 100 trades before you lose your capital. And no matter how unlucky you are in the market, generally in life, no matter how unlucky, there is no way you're going to blindly, even for a novice, blindly enter, buy and sell for 100 times and you lose the 100 times. It's not possible. Even with the forces of good and bad, it's not possible at all. So to cap all this, for you to properly be able to take the right leverage, use the right stop loss according to your trading capital. Actually, with over time, we'll talk about that later. There's actually a formula where you can use to calculate your risk and to get the accurate lot size for a beginner, you understand. But for you to be able to actually follow these rules, it's a function of discipline. So it now boils down to discipline. If you are disciplined, you can easily avoid greed. You understand? If you are disciplined, so it all boils down now to discipline and contentment. For you not to take risk and for you not to be greedy.
Okay. I would say I took a lot from what you just said, but most importantly, just to sum it up, I would say your answer to my question is first your leverage. Minimize your leverage. That's the first thing. Minimize your leverage. Second, always use your stop loss. Always use your stop loss. Is very important. Calculate your risks.
At every entry.
Very, very important. And thirdly, you made mention of keeping your monthly percent or return very minimal. That's from 10 to 15%. This is something I also want to talk about a little bit, because when you made mention of 10 to 15%, though, that's, to some people they would consider that as a very high risk, while to some people they will see that as a very minimal and low risk to work with. But here in our society today, here in Africa, I believe a lot of people or a lot of individuals see that as a very little thing, even if money is not really that much over here. But I think our urge, or the way we see money, I would say the way we see money or the way we look at money here is different. For example, I used to have back then, for example, this is just a short story, I used to have this person I trade for, an investor. Yeah, so this investor approached me to get to manage an account for them, and eventually I was like, okay, every month you would be expecting 10 to 20% from me. But to this investor, it was really, really small. It was really small to them. You understand? So that pushed me to wanting to make more to meet up with the demand of this investor, and eventually that actually led to a loss. So to you, speaking on that, I just want to know, do you feel 10 to 15 is very, very okay in terms of return? Do you think that is very, very okay, and that should be like a standard to observe in terms of return to investors, and that will also keep you sustainable as a trader if you are just aiming for that?
I'll come in like this. Ideally, everything about life is all about ratios and percentages, not just about Forex now. You understand? But we're using Forex as a case study. So when we talk about percentages, it becomes relative. Okay? Now, I can call a trade that will give us 100 pips profits. Now, the person trading 0.01 with a $100 account makes just $10. The person trading $1,000 with 0.1 makes $100. While the person trading a 10 lot size with the same 1 lot size makes $1,000. Now, they've all made 10%, but the person with the $100 is not satisfied because it's just $10. Or the person with $1,000 might also not be satisfied with the current economy in Nigeria. $100 is small. 150k, depending if you're in Lagos or in Abuja, depending, that could actually not be enough to sustain your lifestyle. But the person trading a $10,000 account will have made $1,000. Might actually be on the average side. But look at somebody who have $1 million trading and he makes 10%. That is 100,000. So ideally, when it comes to trading, the more money you have, the less risk you should take. It's all a function of your account size. Okay, so personally, I know the economy is ravaging in the country right now. Let's not dabble into that. So I usually advise my students, if you want to start trading at all, you should be looking at a minimum of $1,000. So that's why I mentioned 10 to 15%. So for a starter, if you're making up to $150 at least, that should be able to
cover up, with our reality
that
today.
Light, okay, just to sustain. And all right, but immediately you start having huge capital from $50,000 to $100,000. The more money you have, the less risk you should take psychologically. That way, you tackle the risk and the greedy part of you. If you have that as your mantra, more money, less risk. Simple as ABC, and you will not your cap. So the first rule of trading when it comes to money management is learn how not to lose money, and you will make money. Because if you're disciplined, there are trades that can give you a ratio 3. Okay, so if you're risking 1% per trade or even 0.5% per trade, it invariably means that for every trade you take, you risk only 0.5% and you make 1.5% for a 0.5% risk per trade. Okay, and if you take an average of 10 trades and you win 5 and you lose 5, let's say you're still an average trader, your win rate is 50%. Okay, what that means is 0.5% times 5, you're losing only 2.5%. And if the other 5 trades are correct, you end up with what? 7.5%. So if you subtract 7.5 from 2.5, you end up with 5% profit. So let's say for that week or within 2 weeks, you took an average of just 10 trades and you lost 2.5%. Considering just 0.5% risk and targeting 1.5% profits, you'll have ended up with 5%. That's discipline we're talking about in relation to money management.
Yeah, that's actually a very, very, very nice breakdown you just did. So basically, from what you said and what I got, your percentage or your target should be relative to your account size.
Exactly. And the more money you have, the
the less risks you should take. Okay, the more money you have, the less risks. That sounds, because a lot of people would see it like the more money you have, the more risks you should.
That is where people listen, and that is where you now hear somebody has blown $1 million, and you now be wondering how. Well, it's very, very possible. I met traders, told them, oh, your 500k can be blown in one day. It's like a drop of water in an ocean.
Yeah.
So the very moment you start seeing forex market as a river or a pond you can go and empty, then you get yourself into trouble. You should see the forex market as an ocean that you just go take a cup of water you want to drink and come back tomorrow knowing fully well the water will still be there for you to drink again. It's all about discipline and focus.
That's true. Come back tomorrow. That's a very important takeaway. That's a very, very important takeaway to actually take out of this, because you can't make the money at the same time. You can't make the money every day. You can't make the money off the market just one day. Always think about tomorrow. I think this is what kills a lot of traders. This is what caught a lot of traders short. They just, once they get into the markets, they just get blinded by tomorrow. They just want to make everything today, and I feel that leads a lot of people into revenge trading, because when they lose today, they don't want to lose. They don't want to accept that loss. They want to get that loss back, possibly even add a profit before going to the next day, and this is what brings a lot of traders back. So if you're a trader out there, an aspiring trader out there, from what Mr. Wilson, the head of education, just said, be very, very, very patient and always think about tomorrow. That's a very important thing to take away. Always think about tomorrow. The market is always there for you. So moving forward, Mr. Wilson, I also have another question, though there's a lot of questions that will be coming from me, more to come.
Right.
So what I want to ask you right now is, in reality, this is very, very visible. In reality, we can see the forex markets expanding massively every day over this region here in Africa. We can see how a lot of people is getting into trading. A lot of people is interested into trading now. A lot of people want to know what's happening because they are seeing people talking about trading and all of that. But in reality, again, as much as the number is increasing, as much as the number of traders is increasing, the number of liquid is increasing, there's still a huge number of people losing to the market. There's still a huge number of people losing to the market. So for you, what do you think will cover this gap of unprofitability in the African market? What do you think? Though it's a general problem. It's a very general problem. We're talking about our African market here today because, like I said, the market is getting way, way bigger every day. But that does not mean people are making money every day. A lot of people are losing. You understand? So for you, what do you think will cover the margin of unprofitable traders? The number of unprofitable traders in our region today. What do you think will cover that?
So to cover that, I want to start by saying that in trading, there are levels you attain. All right. Now, generally, this is not just about trading, but we're narrowing down to trading. You understand? Psychologically, the first level is people don't even know that they don't know.
Okay. People don't know that they don't know. Okay.
So I remember some years back I was doing a training in Owerri, and somebody walked in my training hall. I was teaching harmonic patterns using Fibonacci theory. You understand? Advanced harmonic pattern, bad patterns, normal ABC pattern. Now for an advanced trader, that's simple. Now this person walked in and said, oh, I know what I see, and he said he wants to come to start my advanced class and start trading. I was like, oh, that's good. So I asked him, how long have you been trading? And the guy said he's been trading for the past 20 years. Now I was talking about this happened in 2019. Okay, and the person said he's been trading for 20 years. So as at 2008, this person already started trading. That's what it means. So the first windfall of the forex market that crashed before the introduction of insurance, that was when this guy started trading. And I threw a little question to him, what is pips? Now this is a basic question. The person doesn't know what is pips.
No way.
Yeah, and that was what happened.
No.
And everybody in that class, just in that class for 3 months now, and they started laughing. And everybody knew why they were laughing. Because as a basic trader, that is the first thing you're supposed to know. So somebody who has been trading for over 20 years doesn't know what is lot size and what is pips. And he calls himself a trader. So at that juncture, he doesn't know that he doesn't know. So there's nothing that guy will do in the market. He's going to keep losing money if the foundation is not right. So first of all, identify that you don't know. That is the first step to stopping the losses. Be ready to get the right,
Or reducing the losses.
It just like when I started learning, I was actually working, and it took me 1 year. I was studying, attending online classes, pay for different courses, until I told myself I know what I am doing before I resigned my job to trade fully. You understand? And the beauty is the market is dynamic, so it's a never-ending learning process. So you have to keep learning because the market is dynamic. So you have to become dynamic as well. So even when you are profitable, you don't have to be lackadaisical. Your discipline should remain intact, remain humble, and trust me, you succeed in the market.
So from what you just said, I grab something of you making mention of a lot of people not knowing but thinking they know. I think this is a problem a lot of traders face, or I would say this is a problem the industry at large face, because a lot of people, what bring them into the financial market, it's not really about like that passion of wanting to know what this is all about or what is involved in this. But I think what brings them into a lot of traders that are trading today or trying to make it out of trading, what brought them into the market is just what they saw. Maybe they saw someone making some kind of profit online that they're like, oh damn, this is a lot of money and I just want to go and make this too. So once they get into the market, they don't even really chase the knowledge as far back as basics, getting to understand the basic before even moving forward, because they went into the market with that mindset of what they saw online, a profit maybe from a mentor or whoever they saw that online. Okay, so my question now is falling down to, do you think it's like a good thing to, or do you think the posting of profits or the flaunting of profits online from these mentors, from the cars, though it's a personal thing, I don't want to like anyone to see this as a job or anything, but yeah, for you, do you think the posting of the profit online, the flaunting, the lifestyle, do you think it's affecting the trading industry positively? Because for me, I won't lie, for me, I would say as much as it's making the industry grow, as much as it's providing the liquid, it's bringing a lot of people and a lot of attention into the market, it's still kind of affecting it negatively in a very huge way. But I would just like to know what you think about this. Do you think this is something that affects the market positively or negatively?
To answer that question, I want to say that it's a two-edged sword. On a general view, it's affecting the market positively, you understand, because coming into the market, you come in with a vision, and you are seeing that promising vision, people already there are successful. Although the problem now is, we all that are fronting this lifestyle do not post our failures. Because
Exactly.
we always get bumped in the market.
Yes.
Okay. Some persons even we only post our successes and do not post the failures. That's the problem that it now emanates. So people come into the industry with the ideology that, oh, I'm coming here to get rich quick.
It's all rosy. You just come.
This guy is driving a Ferrari. He's driving in the new Cybertruck. You understand? This guy is taking a private jet. Oh, that's the lifestyle I want. Without knowing that there's already a price that has been paid. It's just like asking a question choosing between hard work and smart work. Everybody say, oh, I want to work smart. But trust me, you have to put in the hard work before you can think of working smart. You can only work smart when you already worked hard. You understand? So that's a problem. It doesn't really show you the negative side. It's just a few persons who come on live sections and say, oh, there's NFP, they sell gold, okay, and boom, the market start buying. Everybody loses their money, and somehow they might even end up going to delete such sections just
afterwards,
just to hide that, oh, the market is paying off. You understand? And that's
some will even come up with lies, like maybe blaming the market, the market is being manipulated, blah blah blah, just to justify their loss, which I feel you don't need to go that extra. Just be plain, okay, this happened, we lost this and this.
Just like my live section, my last live section on Thursday, this past Thursday, on the CPI Economic Price Index, personally analyzed dollar to the weekend, and luckily the news came out neutral, but there was also unemployment claims which came out negative, which supported the sell I called USD card, and the market crashed. You understand? Gold started buying. But there are some persons on the call that were arguing gold was a sell, and boom, they were selling. Those that entered the buy called made money, while those that insisted on the analysis for a sell on the gold lost a lot of money. Now those that have made profit from the gold buy will start posting, oh, gold buy was good, 300 pips profit. They post one lot size, that will be $3,000. Everybody's excited. What about the person that took the gold sell and lost 300 pips? Meaning, if you had $3,000 and you did not apply stop loss or proper risk management, you were on a one lot size on that gold sell. That buy will have blown your account, and you're not going to be courageous enough. You just go inside your house, cover your head, and start praying. Or possibly go and drink yourself with a stupor. Okay, but you're not going to take a screenshot. Oh, ladies and gentlemen, I just lost $3,000, or I just blew a $5,000 account, or I just lost $1 million. It's not everybody that comes online to post such failures. Nobody. It's not just about trading. Now, nobody posts their failures. That's why I tell people social media could be a fake lifestyle, inducing people to lead them astray. You start envying people and trying to meet up. Meanwhile, you're just putting yourself under undue unnecessary pressure.
That's true. I think that's also what makes Investlo different from other brokers, because Investlo is really concerned about educating its traders, giving them the full knowledge they need about the financial markets, from beginners down to advanced, for them to actually know what they are doing and what they are getting involved in. A lot of other traders out there don't do this. You don't get such knowledge from free from other brokers out there, I mean to say. So this is actually something we need to infuse, and this is lowering our profits posting and also posting our losses. I feel that's how we will deal with this, so that people outside who are looking into the financial markets will have a balanced understanding that, okay, as much as people are making money, people are losing money. So coming in with such a mindset,
not necessarily that people are losing money. There's a possibility that you could lose your money. Trading is risky. Yeah. It's not all roses. In short, no business is rosy. Not all business. Recently, a friend who was in another business, not trading, but he's still trading. If you look at it from that perspective, they deal with grain storage. You understand? They buy at harvest and sell when prices up. And now there's a new government policy in town that bans exports of grains. That all grains in the country should be sold in the country because there's not enough grain for us to consume. Now, because of that, demand dropped. They could no longer export their products, and what they bought at a certain X amount has plummeted down 50%. So they are losing 50% of their capital. Now, this was a business I was trying to take some profit from my forex account that I was trying to, and they're telling me they're losing 50%. I'm already discouraged. But now, because we're very close, that's why he opened up to me. It's not everybody that will open up that, oh, storage business is bad this year. You understand? And it's going to continue to be bad because of a simple government policy. I'm not condemning the government though. For me, if you look at it on the bright side, it's a good policy for the country. You understand? But it's not a bad policy for those involved in the business. You understand? So that's just it.